Welcome to Bitcoin Escape Plan. Will Christmas be good or bad for Bitcoin? Stay tuned and we'll find out. As always, I start these videos off with a quick analysis of the 4-hour chart just to give some value for anyone who is here early. And then I'll dive into more of the broader term, what's happening in the markets at the moment, just so we can kind of get a temperature check of what's actually going on. And then at the end of the video, I will go over my Kalshi bets over the past couple days and just kind of what I've learned about the prediction market. So make sure you watch to the end for that. Spoiler alert, I am in profit, which is excellent. All right, let's get into the video. Like and subscribe. So all these blue lines, these are just from the Kalshi bets that I've been taking. They've been important for me paying attention to during the actual day. The important ones, however, for our analysis is this guy. This is 86.1. I've talked about that a million times, and 90.4. Also talked about that a million times. And then on the daily time frame, it's actually 89.7K is the pivot that we're looking for. It's this guy right here. But in terms of the 4-hour, what we want to pay attention to is we've already had this retested a couple times over the last few days. The most recent one being earlier this morning at 4 o'clock in the morning, Los Angeles time. And at the moment, we're still showing strength above it. You know, as you can see, all these candles are holding on to this level here, just at above 88. Really wants to hold above 88. I've been paying attention to the prediction markets for the last 2 days straight, and I can tell you that 88K has been really important that entire time. They really have been trying to hold one way or the other, and sometimes it goes to literally the last like 2 minutes of a candle before it's going to break to one side or the other. So I would imagine that they're going to fight that all day, and then if we do pump lower for whatever reason, then that would be an invalidation if we can't maintain above there, and that would push us down closer to that 87.5K. That's not my base case at the moment. It did trend up fairly, equanimally. That's not a word, over the last couple of days. And it does kind of seem like we have more room to rise than anything, unless it continues to fail key levels like 89. And it's struggling a little bit with 88.5K. Now, a lot of times these levels, you can see them ahead of time. It's going to be on the middle of a range or the top of a range. It's going to be at an 88.5 or an 89. Like, it's really not rocket science. It's also how the betting markets work. And again, I'm going to dive into that at the end of the video, but kind of like to zoom out to the broader idea of what's happening in the markets at the moment is we are still below the monthly SMA. We're still below it. That's not a good sign. There's no time in the history of Bitcoin where that is a bullish signal. You can't find it. It doesn't exist. So if we go back real quick and we take a look at 2021, we don't touch it here. We didn't touch it here. We broke above, and then we touched it. When did we touch it? We touched it in January of 2022 and chopped for a couple months and then lost it. What have we done now? We have touched it. So my base case, which I've already talked about in several videos on this channel, is we're now going to chop for a couple months and then probably are going to lose it. And what really matters is going to be the shape of the SMA here. As you can see, we've started to round out a bit, but haven't quite crested and started dropping lower. But once we do start dropping lower, it's going to be pretty clear indication of where we are in the cycle. Let's just take a look at 2017, just for shits and gigs. So same thing. It takes longer in this case. This is 2018. So we've peaked. We're outside of the Bollinger Bands now. And that is an indication that we need to short. We continue dropping. It takes all the way until the end of 2018 to get a confirmation on the monthly. So that's why sometimes you need to be very patient in order to use this indicator properly. Whereas other times you shouldn't ignore it. This is early. This is happening very early, which is a strong indicator that we're going to chop and drop, not that we are going to magically start going higher. We don't have any evidence on the chart that it does that. It's just not how it behaves. It does that on the other side of a flip where it's below for a while and then it flips, same as over here. It's below for a while and then it flips, and that one even needed to chop longer. So there's not really any reason for us to assume that while we're flashing one of the most bearish signals that exists for Bitcoin, there's nothing more bearish than touching the monthly SMA. We need to assume that that is likely going to indicate a further drop to the downside. Same for the weekly time frame. The weekly time frame, it's very rare that we spend that much time below the SMA and it means anything good for the market. And we're nowhere near the levels that we need to be. Now, we can argue that in a post ETF world, which is right here, that the price moves a little bit differently, and maybe it will continue stair-stepping forever. But what it seems to do more reliably is it'll pump for a while, and then it'll get to a relative top, and then it'll just chop and give it all back. Or not quite all of it, but most of it. This didn't quite get to these lows, but it did get to this wick right here, right around it. And currently, we're seeing the same thing play out, where we're not quite at the lows for, I believe it was April, getting to 78K. We're not quite there now. We've come close. We wicked to around there, but held above it. And so far, our closing weekly candles are up here at about 87 or higher. And that's pretty much what we're fighting to maintain at the moment, is can we stay above these guys over here? If we can stay above those, okay, cool. We've got a little bit longer that we can chop, but the overall trend is still, we've reached a relative top. So what are we going to do now? We're going to chop for a long period of time. And you have to bring in the context that this is the end of a 4-year cycle. I know a lot of people are talking about a super cycle, about how next year is going to be different, quote unquote. And let's take a look at what that means in terms of gold. Gold is at, not quite at all-time highs, but in terms of weekly closing candles, it's the highest it's ever been. That is typically indicative that we are still in a time of fear and panic when money is flowing that irrationally into gold, and it will eventually peak out. So this time peaked out in 2020 before chopping. Same thing over here, peaked out in 2011 before chopping. So there will come a time, and I don't know exactly what price it is for gold, but there will come a time where we finally get to whatever levels. It doesn't even have Fibonacci pivots higher. We'll get to whatever levels it needed to express, and then it will no longer be willing to express them. The S&P 500, if we're looking at the futures, same thing. We're pretty much right at all-time highs. This is another one where it will end up having to give some of this back. It's not going to be able to hold on to that indefinitely. And I know a lot of wealth managers and institutions are saying that they expect the S&P to underperform over the next 10 years. And this quite potentially could be, the earliest signs of that. If we go back, I don't know how long. Yeah, so this chart goes back far enough to what we need. So in the great financial crisis, this is a little history lesson for you. In 2007, it would have been really easy for you to see, oh, okay, we've peaked, and now we're going to start going lower. Let's actually take a look at the monthly on this. That's what you would have been looking for when everyone says that the 2008 financial crisis came out of nowhere. No, not really. It was pretty clear on the chart in 2007. We broke below the monthly SMA and then continued to fail it every time we tried to retest it. Now, again, this is the S&P 500, the futures. So we have pretty accurate data of what the price is going to be, even on the weekends. And then same thing for gold. Let's see what gold did during 2007. So during that time where we entered the financial crisis part, so this is where markets would have peaked, stock market would have peaked, gold starts ripping. Gold starts ripping hard that whole entire time, really until we've reached the relative bottoms of the market. So a baseline expectation for gold in this instance is it's not going to stop ripping until we reach whatever the bottom of the markets is. So let's bring this back to Bitcoin. What does that mean for the most likely progression for the price. So if gold is going to continue ripping until the local bottom of both real estate and, the stock market, then the same thing is going to happen to Bitcoin, where Bitcoin is going to face a lot of that downside pressure. It's already, we just compared it to S&P and to gold. Bitcoin has not had the same experience. It's not sitting at relative highs. It has dropped. It's dropped to a very key level, and it's currently below where it needs to be to maintain bullish momentum from that key level. So what we can kind of assume is that gold is going to continue to rip until that relative bottom. And that relative bottom for Bitcoin, if we just go based on the assumption of prior markets, which I don't know, everyone has already been burned this year by assuming it's going to happen the same way that it has in the past. So maybe just food for thought that it's not going to happen exactly how we fucking think it is going to. But if it's going to follow trend like it has in the past, then that means that the bottom is likely going to be October, November of next year. So if that is the bottom for Bitcoin at least, and potentially the local low for the S&P 500 as well, assuming that it has topped out by then, it's very likely that the liquidity could continue to flow into the S&P and gold first. In Bitcoin really doesn't see it, and we just continue to see a flow out of Bitcoin. But I've talked about this in a bunch of other videos. I really think that the most important thing to pay attention to is going to be when the stable coins actually come en masse. I think the broader context of what's happening right now is if I'm JP Morgan Chase, right, and I offer only my rich clients Bitcoin-backed loans here, those rich clients are not happy right now because the price just dropped, and a loan that they took out when Bitcoin was $115,000 per Bitcoin. Now the value of that loan has dropped precipitously. It's dropped by 30-40% from when I took out that loan. So if I'm a very rich person at JP Morgan Chase, I'm not very happy about that. I'm pretty pissed, like that. I feel like they knew better, whatever. So they're going to cause a little bit of pain early on. And then what we're really looking for is if we do get to, I've talked about these levels a bunch, from about 39K to about 54 to 70. So 70, like I would say 62 to about 74 is going to be the first real test. I think we're going to chop, like I said, until probably February. And then if we can't maintain the levels in February that we need to be at, we will drop lower. And that's when we will see a retest of 62 to 74. And then depending on how we react there, the most likely outcome is still a further drop. But there's a real possibility that if we show strength at 73, that we just go back into a consolidation range, which is very possible. People talk about gold or Bitcoin being digital gold all the time. Well, if we are to assume that over time it's going to get less volatile and it's going to start to look like digital gold, then same thing as gold. Gold had its peak and then it chopped for a while. It's just longer periods of time. This is only for about a year. Gold did it for several years, So there is a possibility where Bitcoin is about to enter the same phase where we've reached the local top and now we're going to chop and then drop. And then we're going to just kind of chop around for a while. And maybe we get back to these levels again. Maybe we do not. But it's not going to be exciting anytime soon. And here's why that is so important. Because when we do get over here to these bottoms, wherever they are, I don't care if it's up here, I don't care if it's down here, it doesn't matter. That is when they're going to be most ready to turn on the money printer because they'll have already onboarded enough people into JP Morgan Chase and Citi specifically with the stablecoins, where they'll now have trillions of dollars in these stablecoins, and they're going to need somewhere to put that economic value. It can't stay in the stablecoins. Stablecoins don't provide yield. They're not allowed to based on the laws that they sign. They're not allowed to have yield. So really what they're doing is effectively replacing the payment system and wire transfers. What does that mean? People only send wire transfers when they need to spend a lot of money, when they're buying a car, when they're buying a house, when they're buying a large amount of assets. That's what they actually need it for. That's how the payment systems work. So if the payment systems really get turned on in mass right over here, they're going to need that money to go somewhere. Where is it going to go? It's going to go to things like Bitcoin. It's going to go to real estate. It's going to go to the stock market. It's going to go to gold. It's going to go everywhere. We've come into a point of the cycle where we're divorced from, money coming into the system, meaning it goes exclusively to Bitcoin. That's just not reality anymore. Like I said, I'll talk about this more at the end of the video, but been studying the prediction markets pretty heavily for the last couple of days. And I really believe that that's where a lot of the money is moving, is people have kind of understood what Bitcoin actually is, which Bitcoin is, I was talking to my mom about this for an extended period of time on our last call. Bitcoin is not just number go up. Bitcoin is something where in 10 years from now, you're going to be able to go into any bank in the world and say, I am willing to give you X amount of Bitcoin. You tell me what the rate is for a loan that I'm able to get. You're not going to tell them the total amount of Bitcoin that you have. You're just going to tell them, this is the amount that I'm willing to let you hold on to for me. And they're going to say, oh my God, thank you so much for your business. Thank you so much, sir. This is the rates that we offer. They're going to be stoked to have your business because it's going to continue to become one of the only true flights to safety from all of the dollars in the world losing value, including the US dollar. And I'm not going to get into a huge rant about the US dollar and what I think is going to happen to the petrodollar and how eventually I think barrels of oil in Dubai are going to be priced in Bitcoin. And when that happens, it's going to create a cascade across the fucking globe. Not going to get into that in this video. No tinfoil hat in this video. Just really talking about the broader context of what I think is going to happen for the price of Bitcoin, which is slow chop. That's what I think is going to happen between now and February. I know nobody wants to hear that, So let's bring it home for the Christmas aspect of this in particular. Does that look like a bullish chart to you? Does that look bullish? I know everyone is talking about how maybe there's going to be a Christmas rally, maybe there's going to be an end of year rally. I've seen a lot of channels on YouTube that I actually respect their content. I like their content, and they keep talking about how we're going to see a rally higher, and I just think that they're delusional. I'm just going to tell you the truth on this channel. That's my goal, is just to read the charts and to give you my honest opinion about what I think is going to happen. And what I think is going to happen is we're going to continue chopping. And as long as we continue to fail the daily SMA, it's not good for price. Anytime we fail the daily SMA recently, we stay below it for a very long time. We stayed below it for a long time in June. We stayed below it for a very long time, February to March, and now April rather. We did recover from that, obviously, but we recovered from that while still in early year 4 of the bull cycle. Currently, we've been down below for a while at the end of year 4 of the bull cycle. So it's just not really, there's nothing to indicate that we're going to get another one of these. There's just no basis for that whatsoever in reality. I know not everybody likes to live in reality in Bitcoin land, but if we can't get above this guy, 96K, the anchored volume profile point of control, we're not going anywhere. We're just going to continue to go down. We have a huge gap here that even if we were able to fill that, we need a ton of money to enter the market between 99 and about 101. That's where a lot of people got liquidated. If we can't fill that volume, we're just going to bounce off it. That's what's going to happen. We're just going to bounce off it, and it's going to continue to trend lower. So really, our best case for a Christmas miracle is a bunch of money to fill out here, and that's going to push us higher. That's going to give us permission to get back above the daily SMA, where we then are just going to need to fill this gap as well. There's just a lot of gaps in the volume that are preventing the prices from really soaring, And we talked about this. We've been talking about this for months. When we failed this key level up here, I believe it was 117.6 is the one I talked about all the time. So many people got liquidated there that it's not even the most relevant level. This used to be like out there in terms of how much volume was there. So really, when we had a failure of that, if I were a more risky trader, which for me, I understand what Bitcoin is. Bitcoin is something I'm going to hold on forever. If I ever have children, I'm going to give them the Bitcoin that I bought in 2017. That's the point. That's what it is. I actually believe. That's why I made a fucking channel about it. It's because I believe in what the thing is. So when we had an invalidation there, that was the clearest signal that we were in trouble and that we were going to continue to drop. And I did talk about this a lot on Threads at that time. Anybody who follows me on Threads knows I would not shut up about 117.6K. Talked about it a million times. So on the daily, for a Christmas rally, where's Christmas? Christmas is over here. Our best case scenario is just going to be a reclaim of the daily SMA. But as long as we're below, as long as we keep failing at 94, 95, 96, nothing interesting is going to happen. Now, is there a possibility that into the end of the year, randomly a ton of liquidity comes and it pumps it higher? Sure, it's possible. Maybe gold and SPY have so much gains that people want to rotate it somewhere and they want to rotate it and park it into Bitcoin. But why would I exit a chart that looks like it's going to continue in gold and the S&P to enter this? Why would I do that? It just doesn't look good. It still looks ugly. So we just need to be realistic about how does the chart and the trend actually look? How does the alt market look? The alt market looks terrible. Everything is bloody and red. The most of the market cap for a total 2 is down as well. So I don't want to be a downer, but I think people just need to be realistic about where we actually are in the cycle. I should have talked about this way earlier in the video, but you can go subscribe at bitcoinescapeplan.com. Go check out the newsletters that I will be releasing every Monday. I release the free one, and then on Wednesday I do like a deeper dive into a specific topic, and that is in the paid newsletter that you can get a preview for. But so far it's been great, just to kind of go over some key levels. We ended up hitting these levels all week. Those were very important this week. I called it on Monday, and then I go into the higher time frames as well and just give a lot of the context that I'm giving now, but in the form of the video. So go subscribe over there. Let's talk about Kalshi now. So this is kind of, I can't actually show you the amount that I have because I've been using it on the phone, and apparently they don't connect the phone to the app, which is a pain in the ass. In general, I would say there's a lot of issues with this app. It's kind of a pain in the ass. Let me just double check on my phone real quick to make sure that I'm not going to get liquidated from the trades that I have in. Nope. My trades are still in profit. Excellent. So what I've kind of been paying attention to on Kalshi, which just to give you my stats real quick, I started with $98. It is now $128. And I have gotten to that twice now. Gotten to 128. I got to it literally day one, and then I lost all of it down to 98, and then I traded it back to about 118, and then I lost all of it back to 98, and then I traded it back to, like I said, now it's at 128. So I'm still kind of learning all of like my rules for what I'm actually looking for, but let's take a look at this one. So the only trade that I have in for this guy right now, for the 1 p.m. close, I believe is I have one for 88.75. So this guy right here, the highest that the candle got to is 88.75. It did wick a little bit higher. I believe this chart sucks, but I believe it got to like 88.8 or 88.9 today. So what I did is a lot of times you just can't get filled. Like there's not enough contracts for you to actually get filled on something, unfortunately. So I've just kind of been taking whatever I can get, and that one happened to be open towards the top of the hour. So that's a lot of times what I've been doing is at the top of the hour, I'll just go and take whatever is like the most outside bet for the top side range. So what I said is I believe it will close below 88,750, and thank God I'm correct because I only have 8 minutes to be in profit on this. And the one I was trying to buy, which I couldn't buy, is this guy over here for 88. So I would have also bought that. I believe that the price is going to close above 88 for this time, and I think I ended up having to do that for a different time period. Like I think I had to do that for the daily close instead, which this has been kind of interesting. The daily close will end up having a lot more, I guess liquidity is the right word. Basically, it's easier for you to get filled on something that you would otherwise not get filled on. Like on the hourly, there's just not enough volume where you're going to get filled on all of your bets. Like you pretty much had to stay between this range. And even I wasn't getting filled at 88. I was trying to get 88 contracts filled, couldn't get them filled. The 88 250s probably would have been more realistic, but to me, it wasn't a clean enough trade. That was one of the things I made mistakes on when I lost money the last 2 days. Is say price is at 88 304, I would have contracts in for the price to go below 88 250, and it just like wouldn't happen, or really for me, it was the inverse where it would be at 88 2 and I had contracts in for, I believe it's going to be below 88 250, and then it would pump to 88 3 in the last like 5 seconds and it would fuck me over. So a lot of times with these trades, you can't always do it. There's not always going to be enough volume and liquidity for you to get in and out of contracts. But anytime where I'm in profit, and especially, like for a contract like this, for example, that's going to cost you, say you get like $10 worth, that's going to cost you $6.90. And your best case scenario is you're going to win $10. So if I see this go from, the $6.90 that I paid for it to $8.50 or $9 or whatever, then I only can make another dollar or $1.50 off of that trade. But I have to continue risking, $7 to $10. So let's do it with $100 instead. So if I put $100 in this, that means I'm risking $70 just to make $30. So if I'm already at the point where, it's close to expiration and this is now $90 and I can cash out, I can only make another $10, but I've already made $20 that I only get to keep, assuming that it doesn't go in the opposite direction. Now, such a tight range, like again, for the daily closes, you might be able to buy, like the ones that I bought for the daily closes are like way, way out of the range. Like there's no way in hell that they're going to get filled. I bought, let's see, I think I bought 87. Yeah. I bought above 87, 500, which we're way above. I think we wicked below it briefly this morning, but between now and 5 p.m. EST, I don't think we're going to give up everything from today. Most of yesterday was chopping around, and where is this? It doesn't tell me the date or anything. This thing sucks. Maybe this is yesterday. This must be yesterday, and this is the overnight. Yeah, this was going into super late last night. So what I do typically is I'll go and look at whatever the top side of the range was and whatever the bottom side of the range was, and then I'm just going to take whatever bets it will allow me to get into. Like the other one, I put a bet for that I think it will close below 89.5, and again, the highest it went is 88.8. So it would need to break another like $700 to the upside of where it's been today in the next 4 hours for me to lose money on that. And I didn't put a ton of money. I put whatever, like $10-20 into each of those bets. But I think using the daily close instead of the hourly close is just a good way to actually get filled on some of your higher conviction bets. Whereas, this guy was such a tight range that it's really hard to get filled on anything. Like you're not going to get filled on 88, you probably could get filled on, actually, I'm going to go check this right now, see if I can get filled on that guy. I probably won't, but just for shits and gigs, I'll do it anyways. 88.250. Do I think it's going to close above that in the next 2 minutes? Yes, I do. Let's see if it, nope, order not filled. So yeah, a lot of times there's just not enough liquidity on the hourly, and you just sit there refreshing your screen pretty much praying to the gods that they will let you actually make money off of it. So my takeaways really from the prediction markets so far are just that you need to, one, you need to be watching the chart all the time. If you're not watching the chart all the time, I think it's pretty risky. You may be able to get away with just going like way outside the range on the daily time frame. Like obviously it's going to close above 85K. It's been nowhere near 85K, anytime soon or anytime recently, in the last couple of days. So it's somewhat reasonable that we're going to close above that. But you might not get filled on that. There might just not be enough liquidity for that to happen. And then same thing, like obviously it's going to be below this price. You can't even buy those. Even this, you would be hard pressed to get somebody to actually fill you for that. And you're gonna make 2 cents if you're right. Congratulations, you made 2 cents. So a lot of times it's just kind of assessing which one you actually have a better risk reward on. Like this one you have a better risk reward on, but again, you got to wait another whatever that is 4 hours before you're going to be able to get confirmation on that, and that's a pretty tight range. Like there's no reason why price couldn't lose that. Or rather couldn't rise to it and then pump right down. So I think the strategy that I'm going to be continuing to do is I want to aim for a really high win rate. And if I can do that, then I can afford to cut my losers from time to time. And I've been getting better at this because when I've actually lost a bunch of money, it's because I wasn't comfortable just taking a small loss. Like say I bought this at 98 cents and it's dropped down to 95 cents, but it's clear that I'm wrong, that I'm going to be wrong, that I'm going to lose the whole 98 cents if I don't do something. It's way better to lose 3 cents or 5 cents on a trade, but still have your money at the end of it than it is to hold the contract all the way and just be wrong. Like there's no, you don't get any brownie points for being wrong about these trades. You just lose money. Which I believe I just won that trade. Let's see. Oh yeah, $128, baby. So yeah, I won like $1.50 off of that last trade. Fucking pennies. But that's kind of the game that you're going to be playing is you're going to look for whatever are your like mispriced bets early on, and you're just going to try to get filled on whatever you can. It's a little bit different than trading option contracts in terms of how quickly it moves. I kind of like it. Honestly, I'm doing better with this than I am with option contracts. I'm just starting with $98 just to see how quickly I can grow it to say like $1,000. So, let me know in the comments down below if you want me to keep talking about this. I don't know if I'm going to talk about it in every video, but I'll bring it up in some videos. And yeah, at the end of the day, back to Bitcoin, you just want to be stacking, even if it's a small amount, even if it's just a dollar cost average, and that's it. And you're not doing anything exciting about it. You don't need to be on Hyperliquid or longing or shorting. Like it can really just be a simple DCA strategy. And then as you get better at understanding the price, maybe that's when you start, either longing and shorting Bitcoin directly if you're in a country that allows you to do that, or using IBIT or the prediction markets to take some action on that. And yeah, that's all I have to say for this video. Make sure you subscribe for the newsletter tomorrow. I'll go over all of the weekly levels in a little bit more detail and give my expectations of what's going to go on in the week. Thank you so much for watching. Have a wonderful Sunday.